Four consecutive days of losses now for the market as the Gulf crisis goes from bad to worse. Today, in fact, as I speak now, Brent Crude has crossed $100. What is it? In addition to the trading of attacks between US and Iran, and Iran attacking back on Kuwait, which has been happening, today a new player entered the whole mix called the Houthis. These are Yemenis people who are rebels. Saudi Arabia and the Yemenis Houthis have had a long-standing fight. Saudi Arabia had an alternative route for the oil. The east coast is where the Hormuz Strait is. They have a west coast outlet also, and they were moving oils through the pipeline to the west coast side. But the Yemenis today, because there was some dispute between some Yemenis who went to Iran to for the funeral of the Iranian leader, but when they came back, a lot more Yemenis tried to go, and Saudi Arabia attacked, and they counter-attacked, and as a result of which, now Saudi Arabia's supply through the other route is also now kind of hurt and damaged. So because of which, now we have had a oil rise by 31% above the pre-conflict levels, right? And because of which now the whole scenario as far as India is concerned in terms of imported inflation is back on the agenda, hurting the RBI's policy expectations. You saw my monsoon update earlier that while the monsoon has improved, there are still crucial crops. Only paddy and sugarcane have been maintaining last year's sowing pattern. Otherwise, oil seeds and other dal and every other thing has been cotton has been much less sowing than last year. So food inflation is definitely going to come and creep up. So domestically, rate sensitives are obviously under pressure. In addition, this increased price of the oil means the Fed also, because there the labor report came into the unemployment came less than the market expected, which means employment is reasonably strong. So I think the market expected 212,000 jobless reports. It only came at 187,000. So this labor market resilience means that along with oil price increasing, Federal Reserve will keep its focus on tackling inflation, and hence now the chances of a rate hike in September have gone up from 61% a day earlier to 78% now, okay, of a Fed rate hike. So clearly then this means that emerging market flows will get hurt, and overall and that's why the US dollar index of course is strong at 101 point something, but US interest rates have gone to 4.7%, highest level since January 2025. So overall scenario, though the Indian rupee didn't show much impact, domestic bond yields also have shot up now to 6.84%. So clearly not a good time from a rates perspective. So rate sensitives got hurt. So the impact today was that again all the indices were in the red, all right, from large cap, mid cap, small cap, and the micro cap, right? And the advanced decline ratio was as bad as yesterday, with 850 stocks rising and 2,100 stocks falling. Though the volatility index did not show much of a shift at around 13 levels, the fact is that FIIs, who sold something like 800 crores yesterday, stepped it up to almost 3,000 crores today. And the DIs, luckily, after 2 days of selling, because the FIIs sold, as I said, there's a very strong correlation these days between that, stepped in with about almost 3,000 crores of buying. So the DIs and the FIIs kind of matched, but clearly, again, the non-institutional domestic investors had sold across the board, as seen from the advanced decline ratio and the broader market performance being worse than the large cap market. You don't blame the domestic investors for reacting this way, because when oil price is shooting up, naturally they read the worst in terms of the risk, and I think this is quite a normal human behavior, and the market has to be cognizant of that and sensitive to that. So the worst performing, and today only one index, auto index, I think because of Bajaj Auto's yesterday's performance on earnings, was only one in red, and maybe media or some other. All other indices were in the red, and the worst performing was the rate sensitive. So real estate was the worst performing sector, like yesterday, today also, And today, PSU banks were down 1%, private banks down 0.75%, and of course, energy and oil and gas stocks were also under impact because of the refining companies getting hurt by the rise in price of crude. So, all in all, not a great day from the market's perspective. And the earnings which got reported today, I'll just go through a few of them. Well, Infosys reported a 12% rise year on year, but a lot of it was due to the currency depreciation. It was only a 2%, I think, rise on a constant currency basis. So, and what is not good was they reduced their revenue guidance to 1.5 to 3%, lowering the upper end of the range of because of the global uncertainty and subdued discretionary spending in the America. They did speak a lot about AI and how that momentum is converting into revenue, and they talked about one big large deal also of total contract value of almost $3 million, which they said was it. But the problem is that even with this kind of a mixed report, the market capped the growth there, and the IT sector was flat today with all of this. Other than that, the earnings today, Cipla reported a sharp decline because of US price erosion, and so naturally the stock got hurt today. And the other earnings today was, I think, Interglobe reported earnings after the market, but the market sensitive and that stock was also down because obviously they had an 86% rise in their fuel costs, aviation fuel costs. So because of which they went into a 230 crore loss compared to 2000 crore profit last year. So naturally that stock also will tomorrow also will probably react this way. So overall, the theme across today's earnings, a lot of small and mid cap companies also reported earnings. So companies, for example, like SRF, Vishal Mega Mart, all reported good earnings. But the market is now, because of the nervous situation, it's now become sensitive to guidance or ignoring one-off things which get to the profit and hence correcting the shares. So clearly the earnings results now are more focused on the guidance rather than the actual earnings, right? So that's the overall scenario. For tomorrow, the last day, trading day, I don't know what else to expect, but do look forward to my written post on the day's performance when I have greater details later in the night, which I'll post tomorrow morning. Thank you.